Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend Podcast. Yes, it's a big weekend, Super Bowl 58, Usher in the halftime show, and betting on whether or not Taylor will be mentioned in the MVP speech. Assuming, Tim, of course, it goes to her boyfriend, Travis Kelce of the Kansas City Chiefs, who we all know are playing the San Francisco 49ers in the big game. I mean, there's a lot of betting going on ahead
You're
of
making
this.
a lot of assumptions here, Carol. Like, who wins, who's there, MVP.
I said if.
Okay.
I said if.
Okay. So we'll talk all about that betting on the big game, of course. We're going to do that in the next hour with BetMGM CEO Adam Greenblatt. Also, because we're not done with earnings season yet, we had quite a bit this week. We heard from Uber, Wynn, got upside surprises from Disney, Ford, a blockbuster surprise from ARM Holdings. Check out all the details at Bloomberg.com and, of course, on the Bloomberg terminal.
And got to say, they were coming fast and furious. We thought we were at the end of earnings season, but not quite yet. And we also heard from a space that we all like to talk about, food, because you like to eat a lot, Tim.
Yeah, all that talk of food makes me hungry.
Surprise, surprise. Well, Tim, like I said, we did get results from players in the fast casual and fast food space this week. McDonald's, Yum Brands, and Chipotle Mexican Grill. Also from a big healthcare name and from the maker of Barbie and Hot Wheels. And so we're going to kick off this hour with Chipotle Mexican Grill. The stock's soaring to a record high. A lot of analysts upgrading their price targets following their quarterly update. It was a big report.
It was a big report. I also had a hard time focusing because all I was thinking about was eating like a burrito bowl.
Wait. Stop the presses. Tim is hungry again.
All right. Fourth quarter sales and profit beat expectations as both transactions and check sizes rose, defying fears of waning consumer sentiment. Same-store sales growth, it's a gauge that tracks restaurants open for more than a year, that came in at 8.4%, whereas analysts expected 7.1%, so a beat there as well. Revenue came in above expectations at $2.52 billion.
Yeah, investors like those numbers. Brian Niccol, chairman and CEO of Chipotle, dropped in again, joining from the company's headquarters in Newport Beach, California.
Look, I think what we believe is happening is our operation is executing better than we ever have. And frankly, we've just been on a journey to get back to executing this business to Chipotle standards. So, we feel great about our staffing. We feel great about our culinary. We feel great about our speed. And I think that's why we're being rewarded with customers coming in, and you saw the comp that we delivered that was driven by transaction growth, right? That 8% plus comp was driven by 7.4% transaction growth. And I think that's a testament to what our teams are doing in our restaurants on all those areas that I just mentioned.
Brian, great to be talking with you again. Dig a little bit deeper for us. First of all, that same-store sales growth really blowing away analyst expectations. Is that sustainable, you think, in the current quarter and maybe throughout the year to see that kind of growth?
What we've guided is mid-single digits for the year in 2024. And, the way we take this approach is we want to make sure we've got a strong value proposition, which based on all our data, we continue to get feedback that the value proposition is really strong. And then we want to make sure that when customers come in, they get the experience that they want. And so what we've seen over the fourth quarter and as we walked into the first quarter is people are telling us they like what they see. Our teams are in position. Our food is ready to go. The culinary is dialed in. It tastes delicious. And we're working really hard on the speed aspect so that people don't have to stand in line too long. So they get down the line, get to the business of enjoying their burrito or bowl. I think we stay focused on that. We'll continue to deliver really good results.
I'm curious, others in the space, something like a McDonald's, they've talked about low income consumers pulling back on their spending. You guys, your consumer base, what do you expect in terms of U.S. consumer behavior this year? What can you tell us about how the consumer is doing and how they are spending? Because you do talk about transactions up, check sizes rising, but what more can you give us in terms of how the consumer is?
Yeah, so we look at this very closely as well. And first we start with what are people's perceptions of our brand? And the perceptions are really strong right now. People are getting the idea that we're all about fresh food. We're all about food with integrity. They're getting the idea that, hey, this is a great value when I think about what I pay for what I get, the customization, the speed, okay? And so when we look at this among different income cohorts, so less than 40,000, between 40,000, 100,000, over 100,000. We're making progress in every income cohort. So we've seen sales gains with every income group. One thing that I think is happening is, especially the lower income consumer, they are saying, hey, we're going to be really choosy with the money that we choose to spend. You got to give us what we want on our terms. And one of the things that's really great is Chipotle is able to do that, right? We can get you the exact food experience that you want, hopefully at a speed that delights you. And then when you walk away, you feel like, that was money well spent, and I'm going to come do it again.
But let me go back to comp sales in terms of your outlook that you guys put. Brian, why do you think you see growth, though, continuing, but at a slightly slower pace, excuse me?
I look, the way we think about this is we want to continue to focus on executing the basics. Obviously, January, we had to deal with some bad weather across the country. The good news is the days where we haven't seen bad weather, the businesses strengthen right back up. And so we're optimistic about where we can get to. We've switched back to what our pre-pandemic practice was just guiding for the full year. Hopefully what happens is we're able to beat those expectations. That's always our goal. And we'll see how it all unfolds over the course of the year. But we're set up very well to open a lot of restaurants, deliver, I think, really strong in-store experiences and digital experiences, which hopefully will build on the momentum that we've achieved thus far.
Hey, Brian, let's talk more when it comes to labor. 15% of your restaurants are in California. You're joining us from Newport Beach right now. We saw California minimum wage raised this year to $16 per hour. It's going to continue to rise this year and over the next few years. How else, apart from raising prices, is Chipotle going to cope with California's new minimum wage law?
Yeah, look, we're always working hard on what can we do to be more efficient so that we don't have to pull the pricing lever. You've heard us talk about things like avocado, where we're automating how we cut, core, and scoop avocados. We're working on some things, automating our digital make line. We're also exploring things on how we could potentially cut our, onions, peppers in the restaurants in a more efficient fashion. So we're going to invest in those things. The unfortunate fact is the wage increase is moving much faster than these efficiencies that we're going to be able to find. So price will be part of the puzzle in order to, handle the inflation that's looming. But we're going to do everything we can to avoid having to pull that pricing lever. And you'll continue to see us innovate on what we're calling cobotics, so that hopefully we can make the job more efficient, more effective. Team members like it, and it gives the great culinary output that our customers have come to expect.
Totally get it. Other costs, other input costs, corn, avocados, the cost of ingredients. What are we seeing on that front? Are you seeing prices actually going down or increases not as significant as they were before? What can you tell us there? Yeah,
that's right. We're not seeing any deflation, but we've definitely seen a slowdown in the inflation. It's more in the low to mid-single digits. There's a couple pockets where we're still watching things like on beef. We're always careful with where the avocado market might be moving. But for the most part, that's, I would say, started to normalize with the exception of a few pockets of inflation that we're still dealing with.
Brian, do you see yourself raising prices this year?
We always try to wait till we get to about the end of the year to assess what we think we need to do. Obviously this California minimum wage movement, we'll have to assess how that really impacts the business, and we'll take action accordingly. But for the bulk of the business, we usually wait till around the end of the year, see where all the inflation lands, see where our growth lands, see where our productivity lands. And then if we need to, we take pricing usually in that 1 to 2 to 3% range.
Hey, one thing I'm thinking about also, and we saw it play out with some others, about the impact of the Middle East conflict. You guys last year talked about entering Kuwait and the UAE this year. Has the conflict in the Middle East, Brian, impacted that timeline at all?
Not yet. Our partner over there is the Al Shaya Group, and they're a terrific operator. They have a lot of brands and a lot of experience of operating over there. So as of right now, we're still on schedule to open this year. Obviously, they will be the first ones to tell us that if we need to change that timeline. The good news is we think they're a great partner. We think they're a great operator. And I think the folks are going to love Chipotle when we're able to finally open our restaurant in that part of the world.
Speaking of timelines, I got 2 quick questions for you. You have been at the company for almost, I think you're coming up on your 6-year anniversary. How are you thinking about that timeline? Investors are happy. Stock is up almost 1,000% in that time. So how are you thinking about kind of the next leg of that timeline for you? Because I've got to imagine there are people knocking at your door saying, can you come do what you did for Chipotle for us? And I'm also curious if there's any timeline for stock split, because it's an expensive stock.
Yeah, sure. Look, well, what I hope is the next 6 years are like what these last 6 years were from a total performance standpoint. I could do without some of the macro shocks. But it's been a tremendous honor leading this brand. We've got wonderful people. We've got a terrific purpose and product that we provide. And I couldn't be happier to be leading this company. And I'm really excited about all the growth that's in front of us. We're going to go from 3,500 restaurants to 7,000 restaurants. We're going after 4 million average unit volumes. So there's just tremendous growth in front of us, which I'm super excited about.
Yeah.
Everybody asked us about the stock split. we'll have to wait and see what
Citi raised it. It's now like a street high over 3,000.
Like, how high would it have to get for you to do a split?
Yeah.
Very briefly.
Is there a level?
You know what? We never have a defined level, but it's something we talk about, and if it makes sense to do, we'll do.
That was Brian Niccol, chairman and CEO of Chipotle Mexican Grill. Other names in restaurants reporting recently include McDonald's and Yum Brands. That was this past week, and we got Starbucks last week. And you can check it all out at Bloomberg.com or on the Bloomberg terminal. Michelle Korsmo, CEO of the National Restaurant Association. It's the business group that represents the industry and includes about 1 million restaurant and food service outlets among its members. She stopped by as well with an update on the overall restaurant industry.
It's exciting, actually, in the restaurant industry right now. What we're looking at in our State of the Industry report for 2024 is that the sales numbers should be above $1.1 trillion. So a huge economic driver if you look at sales in the restaurant industry, which everybody's very excited about. Of course, the sales numbers don't tell the whole story.
Correct.
Much to what you're talking about. And
when you throw out a number like 1.1 trillion, is that above pre-pandemic? Like, give us a number alone, but give us some
right. We are now
perspective.
above pre-pandemic. Last year was the beginning of coming back to pre-pandemic numbers. And so it's great to see that kind of growth in the restaurant industry. But again, it's sales numbers that we're talking about here.
Is that because of higher prices?
Higher prices. And of course, we also see higher expenses.
Well, I want to talk about that a little bit, specifically when it comes to wages.
Yes.
Because California, for example, is $16 minimum wage right now.
Right.
A large portion of your members are working in restaurants or have restaurants where minimum wage is par for the course. What is your position when it comes to a national minimum wage and the increase that we're seeing in a lot of different states where there is a higher standard of living?
At the National Restaurant Association, we really love to be engaged in that wage conversation because it's so important to our members, because they're trying to find great workers and a great workforce. And part of how you do that is find that nice balance between trying to ensure profitability in an industry that has tremendously low margins, 3 to 5% on average, and then also trying to attract great workforce. And so what we found is that the wage question is really one that happens, and the conversation happens at a local level, more at the state level and at the local level than at the federal level. But without a doubt, and anytime you're in a place where you want to talk about what's going on with the minimum wage at the federal level or at the state and local level, we want to be in that conversation.
Is it problematic, though, when it gets to $20 an hour? I'm looking at, that's what, $800 a week?
Right.
That's $3,200 a month. I mean, we're not talking about, if you bring it out to the annual level, most folks would say, wow, that's just somebody maybe getting by,
right.
Barely. And if you have kids or something, it's going to be even more problematic. So I do wonder, restaurants used to be kids in high school and kids, who weren't supporting families, that
right.
kind of thing. It's changed dramatically. So is that part of their thinking about the type of workers that they are essentially hiring? Like, who are they?
Well, it's interesting. We'd love to have more and more of those kids learning how to work in the restaurant industry. But the other thing that's true in the restaurant industry is people tend not to be in those minimum wage jobs very long. What we find is there's a lot of mobility. So if people are in the jobs that are the types that are at the lower wage levels, they usually are in those jobs because they like the convenience of the schedule. There's something else about that particular position that appeals to them. But those that have any kind of longevity in the industry, we'll see those individuals kind of go into other management types of roles where they are bringing in more money. And depending on the restaurant, if you look at a full service restaurant, especially in an environment where there's tipping, you can have very well compensated employees across the restaurant.
What about when it comes to other expenses that we've seen rise over the last couple of years?
Mm-hmm.
Inputs like dairy, inputs like meat, other food costs that have gone up. What are you hearing from members? Is that stabilized at this point?
It's stabilized. What's interesting about the varying food cost increases is that it's never consistent. So you see dairy prices or egg prices that will go up, meat prices that will go up, and they will often come back down.
Like chicken prices have come down a lot.
Chicken prices, yep, have come down, right? So those things will vary over time depending on what those larger macro pressures are. But what they found then for a restaurant is that it's really important for them to be tremendously agile in the way that they're managing their food costs and the way that they're thinking about the menu that they're putting together for their customers.
So they changed the menu.
They changed the menu.
To either cut the costs, right? The input costs, right?
Yep.
And so they do that. That's interesting. Well, go back to McDonald's, though, for a moment, because, they specifically had warned about some of the concerns in the Middle East. They've been a target,
right.
And some would say rightfully so, but nonetheless, it hasn't had an impact on the bottom line. But growth in some of their other regions weakened as well. We talked a little bit about the U.S. Market overall. Are people, any of your members, you sound very upbeat, are any of them talking recession or slowdown in consumers trading down?
So what we hear about consumers is a desire for value, and we see that.
Is that trading down?
It's not necessarily trading down. What
Okay.
they're interested in is a deal in many cases. So when we do our consumer surveys, what we found is that 7 out of 10 of consumers are looking for some kind of value. And you'll notice that a lot of restaurants now will use apps and loyalty programs where you get discounts in those apps and among those loyalty programs. And that's part of how restaurants are trying to appeal to consumers to come back to their restaurant time and again. Because we know that even though consumers are concerned about the bottom line and concerned about what's in their pocketbook, they still want to enjoy restaurants. And so the question is, how do we want to make sure that they're coming into your particular restaurant?
So how do restaurants do that? I mean, on one end, you have employees who are about to get paid $20 an hour minimum wage in California in just a few months. On the other side, you want customers who want value, so they want their dollar to go
Right.
further. Where does that leave your members?
I think you figured out why the restaurant business is a tough business to manage. What our members are really doing is trying to balance bringing people in for that value and then knowing that there still has to be profitability in that menu. And so you're going to see that change in pricing, but the other thing you're going to see is a change in technology coming to solve a lot of this problem. What we see is more and more restaurant operators using technology to solve both their operational efficiencies.
Like the avocado
I was just going to say.
over at Chipotle. We're kind of obsessed with it.
I think that's part of it. I mean, the other part that I
it's-
think is when you walk into a fast food restaurant and you don't see people at the cash register, you see a screen that you take your order yourself.
Right. It's a tough balance because everybody wants a smiling face. When you walk into a restaurant, you want to be greeted by a smiling face, and there's no doubt that that's what we want. But we also want an affordable meal. And so there's a balance between having a technology that can provide really consistent, really quick service and having that hospitality that greets you. And even in the places where you see technology with the kiosks coming in, you usually find that they're delivering your meal to your table. So you're getting a little bit more service, even though that first experience of the order may have been much more of a technological experience.
All right, so if you think about, we started with the overall view, just got 10 seconds here. I mean, a couple of words. Is it glass half full, glass half empty? A couple of words to describe the industry and the outlook 12 months out.
Always glass half full in the restaurant industry. This is an industry made up of entrepreneurs who are forever optimistic. And I think that the big story for us is that growth and driven by a desire for takeout and consumer demand.
That's Michelle Korsmo, CEO of the National Restaurant Association.
Coming up, we stay on earnings at another stock that popped following its financial update this past week. A company that's dealing with rising medical costs, retail shrinkage, and safety at store.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Another earnings-related stock move this week came from CVS Health. Shares moved higher after the pharmacy chain and health insurer reported better fourth-quarter results than Wall Street expected, relieving investor concerns about the impact of rising care expenses in its Aetna insurance unit.
As for the outlook, the drugstore chain now expects annual adjusted earnings of at least $8.30 a share, down from at least $8.50 a share. Cash flow from operations will be at least $12 billion, down from an earlier outlook of at least $12.5 billion.
So Tim, after the results, we just wanted to know more. And so we headed to CVS headquarters in Woonsocket, Rhode Island, and Karen Lynch, President and CEO of CVS Health.
In the fourth quarter, we had strong results in our pharmacy benefit management company. We had very strong results in our pharmacy and consumer wellness segment, which essentially is our stores. And, we continue to demonstrate growth in our Aetna Health business. Where we had challenges in the quarter is really at the end of the year, we saw elevated trends in our Medicare Advantage business, where we saw, trends in outpatient services, think hips and knees. We also saw an increase in utilization in dental and vision. But overall, as you said, we ended the year strong. We delivered on our financial commitments. We grew revenues of 11.5%, and we delivered EPS of 8.874, which was a really strong result.
Yeah, investors, kudos, because they've set your stock higher today. The results really do suggest that your insurance unit, you were able to manage those costs and drive the quarterly results. Can you continue to do so? Talk to us about kind of the stress and strain from doing that.
Obviously, we have programs in place, whether it's the benefit designs that we put in place, whether it's our, care coordination programs that we have in place, how we contract with our network and our physicians. So, we feel very confident that we can continue to navigate this environment as we move into 2024. We haven't seen anything unusual in the early part of 2024, but things are, still emerging, and we'll monitor it throughout the year.
What was unusual about last quarter? You said hips and knees really dragged on the quarter at the end of the year. What was unusual about that, and why can't you really model for that moving forward?
Yeah, well, what we saw was just an elevated utilization, and I think part of it is, there's been some pent-up demand over a period of time. What we've also seen is more capacity in the healthcare system. So, more outpatient clinics are staffed now, so they can have more, they have more scheduling available to them. So there's a number of factors that, that we wouldn't have seen that, started that elevated trend in the latter half of December, actually.
Hey, Karen, some other health insurers, Humana, United Health, for instance, who obviously are in this field as well, they have warned that these rising costs will mean raising prices to increase profit margins. Will you have to do the same?
Well, I think it all depends on the business that we're in. So for Medicare, CMS essentially sets the rates. And so we received our first rate notice this past week. And so what we said is, it was in line with expectations, relatively flat, but it didn't cover the overall rising medical trends. So we have the opportunity to go back to CMS and, give them comments, which we'll be doing in the upcoming weeks. So that price is really set, and then we design the benefits around the price that's set by CMS. So we'll be, modifying the benefits as we go, as we learn more about the final rate notice that comes out in April. And then in our commercial business, we obviously have the ability to adjust prices to rising trends, and we've been doing that all along through 23 and into 24.
So this takes into account, because I know you guys had warned, I think it was at the JP Morgan Healthcare conference, that your medical benefit ratio could be higher than expected in the fourth quarter. So I'm just wondering, so you're feeling like that you'll be able to manage that in the rest of the year, or this year specifically?
Yeah. So Carol, in the fourth quarter, we saw some of this emerging trend with medical benefit ratio. So as you saw, we expected, our original guidance was 86% at the end of the year, which we just reported today was 86.2%. So it was a little bit higher higher, but we had anticipated it and talked about it at JP Morgan. As we turn the corner into 2024, we're watching these trends, and we have lots of tools and techniques that we use to help people get the care they need when they need it at the right levels, at the appropriate sites of care, and we help people navigate and coordinate their care.
Hey, Karen, I want to talk about a different part of the business, the second biggest part of the business. That's the pharmacy and consumer wellness segment. Talk to us a little bit about how the retail environment is right now, what you're seeing out there from the consumer. Is the consumer healthy? You have a great view on the American consumer, so share with us those thoughts.
Yeah, so, well, first of all, stepping back, those stores are really another avenue for healthcare delivery. So when consumers are coming into CVS, more likely than not, they're coming in to fill a prescription. So we have seen an increase in, our script volume over the course of 23 and starting in 2024. We built an immunization franchise, so people are coming to our stores for their RSV vaccine, for their COVID vaccines, for their flu vaccines, for their shingle vaccines. That's really creating, additional revenue streams for us and additional value to the consumer because it offers a convenient place for people to get their immunizations. It's usually right around the corner from your home. We've built digital assets so that you have the ability to schedule online, and so we've made it very convenient for those individuals. And what we're seeing in the front of the store, we're obviously seeing consumer behavior. People are making choices for lower prices. We're seeing more of the CVS brand where so people are just cost comparison, and we are starting to see people kind of leveraging the CVS brand products.
Okay, so going to generics a little bit, it sounds like. Hey, let's talk about shrinkage. It's a huge problem over the last couple of years.
We all want products to be taken out of jail because it's so frustrating.
They call it retail jail.
It's crazy.
Is it getting any better, or is it still a huge issue?
Goodness.
Is there any improvement?
Yeah, I would say it's a concern for ours. And first and foremost, we're very concerned about the safety of our colleagues, and we put a number of measures in place to make sure that our colleagues are safe. And as you pointed out, we lock things up so that we can deter some of the thieves from coming into our stores and stealing our product. And, we've seen it somewhat moderate, but we're working very closely with attorney generals, with local law enforcement, to really have people prosecuted when they are stealing from our stores. And this is not just a CVS Health problem. This is a retail problem. And, we all are coordinated to really work with law enforcement so that, we can deter the theft. It is very costly to us. And my big concern is making sure that our colleagues are safe in our stores.
Totally get it. And I'm just curious, it sounds like you've answered it, but I want to ask you about pharmacists specifically walking out. How are you addressing those concerns? And also just concerned about not having enough staff, those pharmacists that have, talked about overlap or not having enough overlap or just talking about burnout. How do you address that specifically? Because that's going to be a big issue.
Yeah, what I'd say is, there's a lot of media coverage on pharmacy walkouts. We actually didn't really have pharmacy walkouts. We didn't close any stores. We were able to staff all the stores. But what we have been doing is making sure that, we and the pharmacists, have one common goal, and that's to make sure that we are caring for our patients and that they're getting the prescriptions that they need. We have been investing, a fair amount of wage investment for our pharmacies. We have also improved our technology, so we're making it more efficient and the operations more efficient, so the pharmacists can actually do what they do best, and that's caring for the patients. We've been investing in recruiting and upskilling and skill development, and we've actually seen a reduction in overall attrition for our pharmacists. So I think we've been making really good progress over the course of the latter half of last year.
Karen, I feel like I'd be remiss if I didn't ask. You talked about script volume being up earlier. Is some of that because of the new weight loss, the new class of weight loss drugs? I mean, what impact are you seeing, kind of the activity, Are people paying for itself? Is it mostly be covered by insurers? And
Yeah, the weight loss drugs, we have seen a lot of volume in the weight loss drugs. We know that they are effective for diabetes and for weight management. There is a shortage, and we're managing through those shortages. But they are, we are seeing, some of the volume coming from the weight loss drugs across our entire business.
Karen, a great snapshot of so much that is important to the economy. So thank you so much for carving some time out for us. Really, really appreciate it. Karen Lynch, President and Chief Executive Officer of CVS Health, joining us from company headquarters in Rhode Island. The stock's still up about 2.3%.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Come on, Barbie, let's go party.
I'm a Barbie girl in the Barbie world.
All right, folks, we are talking about the home of Barbie and so much more. Mattel, the stock bouncing around today, up as high as nearly 3%, lower fractionally as we speak, actually pretty flat now. The home of Barbie, Hot Wheels, and as we said, so much more. Reported sales as well as adjusted earnings per share for the fourth quarter did miss the average analyst estimate, but adjusted gross margin for the year, it did beat the analyst estimate.
Yeah, sales were up 16% in the fourth quarter. Let's get to it with Ynon Kreiz, Chairman and CEO of Mattel. He joins us from El Segundo, California. Ynon, good to see you. I got to tell you, sometimes when we interview you, I just expect like Will Ferrell to show up right there, and it's not Ynon Kreiz, but we are happy to see you this afternoon. How are you doing? How is, we heard from you guys yesterday, stock bouncing around a little bit. Sales were up, but a couple things did not come in line with analyst estimates. How are you thinking about the quarter and in the year?
Yeah, well, thank you for inviting me again. It's always good to be here with you. It was a very strong fourth quarter for Mattel, with double-digit growth in top and bottom line, with significant margin expansion. The year as a whole was a milestone year for the company. In addition to the incredible success of the Barbie movie, which we could not be more proud of, we extended our leadership in key toy categories and gained significant share overall, and continue to strengthen our financial position. We talked on the call about the fact that we generated over $700 million of free cash flow, more than 2.5 times of last year. We achieved an investment grade rating in the year. Our balance sheet is in the strongest we've had in years. And we just announced a $1 billion share repurchase program and believe we're in an excellent position to continue to execute our strategy.
So what else do you do with that strong cash flow and all that money? Where else do you want to invest it? Investors love when you give it back, but where else can you kind of invest it back in the business?
Well, in terms of capital allocation priorities, the number one area that we focus on is organic growth. And we're looking to continue to invest in areas that can create value and position the company for long-term, sustainable, profitable growth. We also look to maintain our investment grade rating and keep our leverage ratio between 2 to 2.5 times debt to EBITDA. And of course, there are M&A opportunities that we're looking to look at and consider. We'll be very disciplined. We will make sure that whatever we do is thoughtful, strategic, and accretive to the company, and continue to be in line with our strategy for value creation.
All right, Ynon, you know us well. You say M&A opportunities, our ears perk up. So what might be some of those M&A opportunities? How are you thinking about it? Because who would have thunk maybe 10 years ago, 15 years ago, that you guys would be creating content and creating a movie that was the highest in terms of gross billings for 2023. So here you are. So when you think about M&A opportunities, where do you go, or where should we be thinking when it comes to you guys?
Well, we can't be too early to be specific about opportunities.
Well, you could, but
too early. But as I said, we have been very disciplined in the way we manage our balance sheet over the years, and we remain very thoughtful and very strategic about any choice that we might make when it comes to capital deployment and on M&A opportunities. That said, we have the capital, we have the strength, we have a very strong platform that is scalable, and we would look for opportunities that would accelerate our strategy without putting the company under any risk, and make sure that it's accretive, and strategic to the direction where we're heading.
If we can follow, though, is it more akin to an acquisition that gives you another toy to play with and build content off of it? Or is it more on the content creation side that you guys, in terms of M&A opportunities, Ynon, might be most interested in?
Too early to be specific. And it's not to say that we don't have exciting organic opportunities. You know, we have a portfolio that proven itself within the toy side. And of course, now we have template and showcase for what we can do outside of the toy aisle. And, you know, some of the important takeaways from the year was how our brands resonate outside of the toy aisle. And that is a key part of our strategy to be successful within the toy part of the company and continue to evolve and grow in entertainment. Other verticals that are highly accretive and adjacent to the toy industry, but where we can create value from organic growth.
Hey, Ynon, I want to talk a little bit about the 2024 outlook. We learned from you yesterday, and I think that some might say it's a little conservative because it calls for a third straight year of flat sales growth. How conservative are you being here?
Well, we do expect the industry to be down in the year. And in that context, we expect to gain share and be ahead of the industry and continue the momentum that we have already with very strong market share gain in 2023. Our priority for 2024 is on growth in profitability, expanding our growth margin, and generate strong cash flow. And this is something we've done successfully in 2023. We believe that we will grow in 2025, both top and bottom line. And with the strong market share gain and overall strong performance, broad-based performance within the toy industry, we see multiple drivers that will continue to put the company on the front foot as we execute our strategy.
And I think, though, I guess we're all wondering, you guys do get a great vantage point when it comes to the consumer. I think a lot of us would say if we want to, get something for one of our kids, like that is a priority. So in terms of consumer and consumption spending, what are you seeing? How would you describe the consumer from your perspective?
Well, what we saw in 2023 is a shift in consumer spending towards experiences and services. And we see it moderating. It will continue to moderate in 2024. And beyond 24, we believe that those trends will further improve and that the industry will return to growth and continue to grow over the long term. The toy industry as a whole has very strong fundamentals. It's an important part of consumers' lives. It's a fundamental core human behavior. The toy aisle is a strategic lever for retailers. Mm-hmm. It's experiential. It drives foot traffic. Items are affordable. And especially when it comes to quality product and trusted brands, parents will always prioritize spending money on their children and cut on other things rather than quality toys for their children.
If you're just joining us, we're speaking right now to Ynon Kreiz, Chairman and CEO of Mattel, joining us from El Segundo, California. Ynon, I want to talk about specific brands and segments within Mattel's portfolio, specifically Fisher-Price. The brand had a great fourth quarter. Do you believe you can extend the momentum here? Do you expect to gain share when it comes to infant, toddler, and preschool market this year?
Yes, Fisher-Price did have a great quarter. It was up double digit. It was number one in the category and gained more share for the full year. Within Fisher-Price, Little People performed particularly strongly and expanded into adult collector line with some great product for the Super Bowl. So look out for that.
Great.
Okay, what about when it comes to Hot Wheels?
Wait.
Go ahead.
So how much demand is there? Give us an idea.
No, as you can imagine, of course, it's in high demand, and Little People is such a great brand, and this is where we touch culture. This is our expertise and something we do so well. You have a product that is evergreen, but here, we have moments and opportunities to touch societal moments like the Super Bowl and create a special offering for that.
Is there a Taylor Swift Little People? That's what we want to know.
Everything is possible with Little People. Watch that space.
All I know is my daughter likes to eat the little people, okay? What about Hot Wheels? Because it reached just $1.6 billion in gross billing for 2023, surpassing Barbie. Do you see Hot Wheels staying the number one brand for the foreseeable future?
Yeah, Hot Wheels is such an incredible brand. It's a huge canvas of ideas and innovation and product and opportunities. Hot Wheels was up 16% in the quarter. For the full year, it was, 16% for the full year. And it was the sixth consecutive record year for the brand after over 50 years of existence. So it's been on a real growth momentum. We gained almost 300 basis points in the category. We have by far the largest market share on record, and Hot Wheels continues to be the number one brand globally in vehicles per Circana. In 24, we expect our vehicles category to grow, driven by Hot Wheels, and Hot Wheels will grow yet again, 7 consecutive record year for the brand. And don't forget that we have a movie in development with J.J. Abrams at Warner Brothers for Hot Wheels, and another movie, a Matchbox movie with Skydance that produced Mission Impossible and Top Gun. So two of the most successful filmmakers in Hollywood are working on two very exciting brands as part of our vehicles portfolio.
How profitable is that area becoming for you? You know, we talk about Barbie, highest grossing film of 2023, generating, and I hope I have this number right, something like 1.4 billion or so, give or take a little bit. What ultimately was the impact on Mattel's bottom line as a result of that movie? I'm just curious.
Yes, we were happy to share that the Barbie movie generated for Mattel in 2023, just 2023, $150 million of revenue and about $90 million of operating income directly related to the movie. This is box office plus toys and consumer product directly associated with the movie. So this is one brand, one movie in 1 year. And the reason we share that is to illustrate the potential that we can generate out of our growing entertainment business.
Right.
And while we're not saying that every movie will be the next Barbie, in the aggregate, this could become a meaningful part of our business. Our entertainment offering that includes film, television, live events, consumer product and merchandise, digital, music, location-based entertainment, in the aggregate across our portfolio can be an important business for Mattel. And clearly, we are on that path to capture that value. And the Barbie movie is really a showcase or a template to illustrate that.
Well, it's a success story, right? I've got to imagine, you talked about a couple of movies already based on Mattel products, toys, if you will, intellectual property, whatever you want to call it. But I do wonder how many people were knocking on your door after the success of Barbie, where many would probably have thought it never could happen, and it did. Are a lot of studios, streaming, and what have you knocking on your door about future collaborations?
Well, you can imagine what the movie did in terms of showing that our brands resonate outside of the toy aisle. And this was something that was not obvious before, and clearly the Barbie movie showed that with the right creative vision, when you work with the best filmmakers in the world, like Greta Gerwig or Margot Robbie, Ryan Gosling, great things happen. And perhaps the biggest evolution for us as a company was to realize that people who buy our product are not just consumers, they are fans.
Right.
And in the aggregate, fans become an audience. And that's when you realize that you're actually speaking to an audience, that's where you see, that's when opportunities open up and you can capture and create significant value in other verticals.
Hey, listen, 20 seconds less, 25. Is it going to be a Barbie 2? Does Alan get a movie? Does Ken get a movie? You can make news right here with us.
You know, we always said we're looking to create and build and develop film franchises. We're not talking specifically about Barbie, but we have an incredible portfolio, and we're looking to continue to excite and delight fans all over the world.
I'm just going to say, Barbie's a doctor, an astronaut, president. She can be a tentpole, in terms of
Carol loved the movie,
franchise.
in case you didn't know that by now. I think it's the second quarter in a row we've interviewed Enon, and she's talked about how much she loves
I
the
bought
movie.
Barbie merchandise.
You're not alone, Carol. You're not alone.
Thank you, Carol.
Totally
Thank you, Tim.
transparent.
Thank you.
Enon, always be well. Appreciate it. Enon Krais, he's Chairman and Chief Executive Officer of Mattel, joining us on Zoom from El Segundo, California. You're listening and watching Bloomberg Business Week.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including no joint bank accounts, husband and wife or partner and partner spreadsheets, student debt, okay if it's Harvard or Stanford, and when it comes to investing basics, the one thing everyone must know about, and our Bloomberg audience definitely does for sure. We'll tell you what that is. We've got tips on how you can live a stress-free financial life and build wealth for the future. This is something you and I both were like, where was this in high school? I needed it.
Well, it's really unconventional. I think that's why it was so interesting, because it's not just about skipping that daily coffee run to save a few bucks. In fact, our next guest says don't skip that daily coffee run. We're talking about Jared Dillian. He's the author of How to Live a Stress-Free Financial Life. We're going to hear from him a little bit later in the program. Plus, speaking of stress, Carol,
yes,
from stress-free to, well, actually stressful, for high school students at least, the SAT and ACT are making a comeback.
Yeah, we knew they would.
Boo.
We knew, boo. Plus, BetMGM CEO Adam Greenblatt on Super Bowl betting ahead of Sunday's big game.
And hey, world, Valentine's Day is this Wednesday. U.S. consumers are expected to spend nearly $26 billion this year on the holiday. The founder of Farm Girl Flowers on the all-important Valentine's Day flower rush and shifting supply chains and paying up for workers.
Turns out, Tim, making bouquets, it's a lot of work.
Those flowers got to come from somewhere.
They do, and sometimes it's overseas, sometimes it's in your own backyard. All right, first up this hour, we begin with our Bloomberg Business Week cover story. The latest issue out on newsstands now, online and on the Bloomberg terminal. And Tim, this story has a feel of Indiana Jones meets National Treasure.
Yeah, though with less dangerous traps and fewer people chasing after you, although it does involve having access to ancient writings that could completely rewrite the history of key periods of the ancient world.
These ancient writings include some 2,000-year-old scrolls that were buried by the same volcanic eruption in 79 AD that froze Pompeian time. So how do we get to unlock what they say? Artificial intelligence. And thanks to AI, these once illegible scrolls are now potentially legible.
For more, we turn to the authors of the story, Bloomberg News tech writer Ellen Hewitt and Bloomberg Businessweek features writer Ashley Vance, who begins by telling us how he came across these ancient scrolls.
There's a guy named Nat Friedman, who I've known for a while. He used to be the CEO of GitHub, which Microsoft acquired a few years ago, and he seems to get interested in strange things. And he had heard that years ago, we knew that there were all these ancient Roman and Greek scrolls that were buried by Vesuvius, and we hadn't been able to read them. We knew the scrolls were there. They were just charred to a crisp, and so nobody could unroll them and read them. And he heard about this, got obsessed with the Roman Empire, and thought, well, maybe, somehow AI technology could read these scrolls. And so last year he created a contest around this called the Vesuvius Challenge, and that's the heart of our story, is following this contest over the last year and the astonishing results.
Yeah, so Ellen, talk to us a little bit about some of those results. Has AI actually been able to solve this puzzle that for hundreds of years people have worked on trying to unscroll these scrolls?
Yeah, and it's been absolutely amazing, because if you compare what we can see now to what people for hundreds of years have tried to get out of these scrolls, doing things to the scrolls that I think, as Ashley wrote in our story, would make historians weep. In the 1700s, they tried to unroll them an inch at a time. They cut them apart. They tried to piece together these tiny fragments of scrolls. What we have instead is technology that uses these very powerful scanners to scan the entire scroll untouched, and then to use to sort of virtually unscroll them, and you end up with these big segments of images that are impossible to read to the human eye, but which these very pioneering and hardworking volunteers have been competing to try to build the right AI models that can actually do ink detection and show the words that are on there. And yeah, the announcement is that there's a team that has won the grand prize of $700,000 for meeting the requirements of the contest, which was to have a certain chunk of the script readable as deemed by this team of classicists and papyrologists who have been looking at the results that the different teams have turned in.
It is so cool. And it's so interesting, you guys, because we are trying to figure out, AI, we talk about it a lot and what it could maybe do or not do. We're all trying to figure it out. And here's kind of real life proof of what it could do in terms of unlocking some of the world's history. Ashley, come on back in. We've been showing pictures of the scrolls, and they, to be quite honest, they do look like logs. And
they don't look like scrolls, okay?
And I can see how someone, as people did in the past, right, just toss them out.
Yeah, like this is like a burnt hot dog or something. Like, these things do not look like they're ever going to be readable.
No, but how much information? Tell us a little bit more about what we know about them so far.
Yeah, well, look, it could be astonishing. So the villa where these were found, it belonged to Julius Caesar's father-in-law, and he was very wealthy, and he had this huge villa, and we've only excavated a tiny part of it. Basically, there's 800 scrolls that we found that come from a closet, and the thinking is that someone like this would have tens of thousands of more scrolls, and nobody's wanted to excavate them because we couldn't read them, and they always broke whenever we handled them. But just to be clear to everyone, if there are more scrolls and we can continue to read them like this, we will almost certainly get new works by Aristotle, Sophocles, Aeschylus, Sappho. This would multiply, our collection of knowledge many times. What we found so far is text relating to this Epicurean named Philodemus, and what the contestants discovered was a writing about pleasure and how the Stoics might be wrong and kind of boring, and we should take joy in food and smell and senses in life.
Hey, Ellen, take us into the technology here and how exactly the team was able to actually do this and use AI, use X-ray technology to get to what is written on these.
Right, so the underlying technology is similar to what you might find in medical imaging, like CT scans, and they take these ultra-powerful scans of the scrolls, and then there's all this work that has to happen before you can even start to try to apply these models to it. Basically, they have to flatten and segment the scrolls, so they take these images and do this work digitally to try to get pages, segments of pages, where then the contestants can start trying to use different models that they designed to try to figure out ink detection. The team that ended up winning the grand prize found this particular strategy that actually came from a different contestant's unique insight, which was, instead of just looking at, instead of trying to build a model, he actually just spent time staring at the images of the papyrus and noticed at some point that there were these patterns, these very faint patterns that he called crackle, which are kind of look like dried up mud. And the idea is that maybe this is like some sort of indication of ink. Anyway, this crackle insight led to some of the other contestants using those crackle letters to start a model, which they then used to reveal other letters, which they fed back into the model, which revealed more letters, and built this very kind of bespoke model specifically for this need, and ended up being able to reveal vast swaths of letters. It's pretty incredible.
So Ashley, we know there are lots of scrolls that are yet to be unearthed at this point, or that's what we think. But what about this technology and this technique being used for other applications? How are analysts thinking about that?
Well, I think, definitely this kind of technology seems like it could be useful for a lot of ancient texts that we've thought were, just untouchable in the past. It is, to Ellen's point, very specific in this area. But I think the kind of cool thing is throughout this contest, we've seen these kind of 20-something-year-old computer scientists, teaming with these papyrologists and classicists who tend to be a bit older, and there's just this renewed excitement that this kind of technology could be applied to our field, and maybe a lot of things that we thought just were impossible are now possible. And so I mean, I think Ellen would agree. There was so much enthusiasm around this from these generations coming together in these two disparate fields colliding.
That's what I loved. Ellen, jump in on this, because I thought as I read this story, it's like folks watching YouTube videos to learn different things. And this idea of, there's a lot of criticism about everything that's out there in the world of social media, and probably understandably so and fairly so. But this story shows when different generations, different people in different fields, different people around the world start tapping and working together, what can be the outcome.
Yeah, I think it's just incredible. It's the story of, several different people just catching this bug where they became totally obsessed with the huge ramifications of maybe being able to read these scrolls and coming up with these innovative ideas of being like, okay, we have this advanced technology. Maybe we can do something that we really, really could not do before. So Luke Ferreter, for example, was one of the 3 people in the winning team, talks to us about how, he was an intern at SpaceX, happened to listen to a podcast in which Nat Friedman was describing the contest. And he just had this thought, like, maybe I'm the one who could do this. And he's so enthusiastic about it. And he spent all this time and energy trying to work on it, like sending images off to his model in the middle of he was at like a college party and sent the images off to this model and then checked back a few hours later and saw these letters that had been revealed. And I think his enthusiasm, like for something that is just not, what you would expect to apply AI to, I think that has just been really inspiring. All
right, lots more to go. Just about 5% of one scroll they figured out. There's a lot more work to be done, correct?
There is, and there's a new contest coming. So the goal is to get from 5% to 95% of the scroll, and then Nat's pretty determined to excavate the rest of the site if he can.
Many thanks to Bloomberg Businessweek features writer Ashley Vance and Bloomberg News tech writer Ellen Hewitt for their work on this week's cover story. Ashley, also the author of Elon Musk, Tesla, SpaceX, and the Quest for a Fantastic Future, and When the Heavens Went on Sale, the misfits and geniuses racing to put space within reach.
You're listening to Bloomberg Businessweek. Coming up, how to purge the urge to splurge, tips on how to get your finances in better shape. Say that 5 times fast.
No, I'm going to instead talk about the SAT. Put your pencils down, everybody. Why standardized testing is coming back after their pandemic hiatus. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Setting up a spreadsheet with your spouse or partner.
Not setting up a joint bank account with them.
Racking up student debt? Okay, as long as it's Harvard, Stanford, or another top-tier school.
Okay, easier said than done, I guess. And definitely knowing what the Federal Reserve is up to. Well, we know that Bloomberg listeners and viewers have that one down for sure. Do all of this, and you may be on the way to living a stress-free financial future.
So says our next guest, Jared Dillian. He is the editor and publisher of the Daily Dirtnap, a market newsletter for investment professionals and a former Bloomberg Opinion columnist.
His new book is entitled No Worries, How to Live a Stress-Free Financial Life. And in it, he outlines some pretty interesting strategies to get there, including how it's okay to buy that daily cup of coffee. Don't sweat over it, okay? And when to worry? Well, it's the big purchases in your life. Oh, also, who you marry.
Big
and
one.
Keeping bank accounts separate when it comes to a relationship.
So typically when a man and woman get together and they get married and they combine their finances, they have joint accounts, people are still mentally keeping track of whose money is whose. They think, well, I put in $500 and I put in $300. And if somebody spends the other person's money, like in their mind, what is the other person's money, then it can lead to arguments. And, I've known some couples, lots of couples, that will get into knockdown, drag out fights over $50. And the easy solution to this is just keep your money separate. When I got married in 1997, I said to my wife, I was like, we are going to keep our money separate. And she agreed. And in 26 years, we have fought about a bunch of things, but we have never fought about money. And we basically just Zelle money back and forth to each other. Like that's
You really do that?
Yeah, all the time. Basically, our deal is I pay 2/3 of the groceries because I eat 2/3 of the food. So if she pays for $120 for groceries, I'll Zelle her $80. And we do this all the time. Before Zelle, it was a little hard. We literally wrote checks back and forth to each other.
Okay, she loves you, right?
Yeah.
Okay, just making
They're
sure.
still married. They're still married.
I actually have somebody getting in touch right now saying, does she love him? Like, yeah, okay, so confirming. Okay, you guys are in love. Okay,
There's more
good.
questions we could ask, but we're not going to go there. What about things like college?
The reason you will pay anything to go to someplace like Harvard, it's not because of the education. It has zero to do with the education. It has to do with the people that you're with.
The network,
the
right?
network, the connections. You are going to school with people who will be president. You will go to school with people who will be CEOs. Your Rolodex will be full of these people. Your unemployment rate will be zero. If you go to a lower tier school that costs $90,000 a year, you don't have those benefits. You're going to graduate with $300,000 in debt, and your earnings power won't be able to support the student loan payments.
Is any student loan debt okay in your view?
What I say in the book is that you should have no more, unless you go to a top tier school, you should have no more than $40,000 in debt. And the reason that is let's
Jared,
say...
have you looked at how much school costs a year?
Oh,
Even
yeah,
for
absolutely.
like, not top tier.
Combination of scholarships and grants and stuff like that. If you owe more than $40,000, you have to be able to pay it off in 5 years.
Right.
If you can't pay it off in 5 years, then you should go to a cheaper school or maybe not even go at all.
And you go into detail in the book about why student debt is so troubling for so many people. And a lot of it has to do with the government and the way that the government handles those student loan payments.
Income-based repayment plans are the worst thing in the world. This was passed in 2009. And basically the government means tests you and says, you don't have to pay this $1,200 payment. You can pay this $300 payment. But then the balance is added to the back end of the loan. It's negatively amortizing. And that's why you have these people that go on Twitter. They said, I borrowed $70,000. I paid my student loans for 20 years and now I owe $100. How is this fair?
Oh, and by the way, in bankruptcy, it does not get erased.
It does not get erased.
Hey, a big takeaway that I
if
have
you
from your
die,
book,
it doesn't get erased. Like it goes off to somebody else, right?
Yeah.
A big takeaway I had from your book is like conventional wisdom is, okay, don't buy that Starbucks coffee every day. Don't go out to lunch when you're at work. You argue don't sweat the small stuff, sweat the big stuff, sweat the house, sweat the car, sweat the partner, sweat college.
Yep.
Don't worry about those small expenses.
Yep. It's literally just math, okay? I get a Dunkin' Donuts every day when I drive to work. I get an iced coffee even in the winter, so I'm a psycho, right? So
well, I think maybe people might have thought you were a psycho with the spreadsheet and the marriage, but anyway.
We're going to table that for now.
It's $3.80. If I do that 225 days a year, it comes out to $900 a year. If I do that for 40 years, it's $36,000, okay? If I get a house that's 500 square feet bigger, I will pay an extra $120,000 in interest on a mortgage. So one decision costs me $120,000 in interest versus thousands of decisions cost me $36,000. The little things don't matter at all.
Right.
At all. And people can give up large luxuries. If you get a slightly smaller house, you're not sitting in the house saying, this is terrible, I hate this house. But if you're forced to give up coffee every day for the rest of your life, it is miserable.
I feel like I want to go there because we talk so much about it. But you say you got investment basics. It's a chapter that's purely educational. You want to begin with something that's boring, but you say it's for your own good. That means for all of you who are watching and listening. The Federal Reserve, perhaps you have heard of it. We talk about it all the time. Why is it so important that people understand about the Fed? We have a very smart audience. They know what they do. But why do you say generally it's important?
I mean, just think about like very recent history. The S&P was at 4150. And Christopher Waller gave a speech where he was hinting at rate cuts. Now the S&P is at 4850. And the Fed hasn't even cut rates.
Correct.
It was just on this slight change in stance from the Fed where it eased financial conditions and unleashed a ton of liquidity. The Fed really has a huge amount of control over the stock market and the economy. So that's why I put that first in that chapter, because the average person on the street, they know who the president is, but they don't know who the chairman of the Federal Reserve is. And the chairman of the Fed has much more influence over their daily life than the president does. I tell people this all the time. I don't really, outside of like some huge change in tax rates, I don't really care who is president. I care who's chairman of the Fed.
Okay, we have 30 seconds left. Controversial to have 20% of your net worth in cash. Again, you say this is for stress-free financial life, not to become wealthy in life. Talk about asset allocation just in the last 30 seconds that we have.
You should be diversified across asset classes. If you invest in stocks, you're not diversified. If you invest in stocks and bonds, you're not diversified. You need to have a mix of financial assets and real assets. You need some commodities, real estate, and gold to be fully diversified.
All right.
You were hesitant to write about gold in the book you wrote, but because you unleash the gold bugs when you do that. But
it's super important.
Okay.
I love this. A house is not an investment.
I know. Scary stuff.
Listen, there's so much there. We scratched the surface.
Where was this when I was 17? When I was 17 years old.
Skip the small liberal arts school and just pick up this book and figure it out. Jared, thank you.
Yeah, come back, Jared. This was a fun conversation. Jared Dillian is the author of No Worries, How to Live a Stress-Free Financial Life. That book, by the way, is out now.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Well, the most read story in the Bloomberg today about everyone's favorite topic, not if you're a parent and your kid's getting ready for college or thinking about it. We're talking about standardized testing.
Or if you even took the SATs or the ACT.
You want to know, I was kind of one of those people who actually liked kind of some of this standardized testing.
Are you joking?
Yeah, I'm a nutcase.
Are you joking?
Yeah, no, I'm not.
You like Saturday morning going to a classroom and taking...
I don't know. It's a little weird. I know. Yeah, I'm a nerd. Yes, Elizabeth, one of our producers. I'm a nerd. But it's also become like a business. Anyway, let's get to Janet.
Yeah, Janet Lauren is higher education finance reporter for Bloomberg News. She's here in the Bloomberg Interactive Brokers studio. We're talking about this because as of today, Dartmouth College comes out with a statement that says it's again going to require standardized testing for applicants following MIT. This is a big reversal from what happened just a couple of years ago, Janet.
Yes, it is a big reversal. During the pandemic, nobody could get to test sites. They were closed. So everybody said no testing is required. MIT 2 years ago about this time said we really need kids who can do well in math. And they reinstated it. And of course, MIT has really difficult requirements, 2 semesters of physics, 2 semesters of chemistry, lots of math. So it makes sense. So it was interesting when Dartmouth this morning said that they were also going that route. And the chatter for decades has been the SAT is unfair, especially for low-income students who can't afford test prep. And now you're hearing that as an argument to keep the test.
That's what we don't understand.
So explain that.
So let's say you're in a school that is not familiar to Dartmouth. Of course, they know the Scarsdales and the Mamaronecks and the New Triers of the world. But, they're trying to find kids. We did a story about rural recruiting. Perhaps high schools they don't really know well. And it helps them to know what their score is. It helps them to know what the high school is. So let's say you score 1,200 in a high school where the average is 1,000. You've done really well in that high school, but of course you're far below the median at Dartmouth, but the information that the test is giving is you've actually really exceeded expectations in that high school.
Sorry, I just have...
No, go.
Okay, this is just related to what Janet said very briefly. I didn't know that schools could actually see that part of the data. You're saying they don't just see the raw score, they also see how you did compared to other folks at your school?
So every high school has their own profile, and it's a lot of information.
In data. Tim, this is a data world environment we're living in.
When we did the story about rural recruiting that we talked about, we mentioned a school in Wichita, Kansas, where the majority of students are on free and reduced lunch. So that tells you you're dealing with a very low-income population. So if you see a student who has rocked the SATs and most of their peers have not done well, it gives them some information in that context.
Janet, having said that, though, they still have parameters, right, of where they want you to hit in terms of scoring. Like they're going to say, wow, tough environment, look what this individual did. Having said that, in MIT, where math is really important, right, and that computational way of thinking, are they still going to have kind of minimums of like where they want someone to hit? Do you know what I mean? Like I'm trying to understand how they use it.
So it depends on where you're coming from. If you're applying from Andover or, again, a really wealthy school district and you have a 1,200, that's not going to cut it. But if you're coming from a place where most kids are not going to college, again, they're trying to find socioeconomic diversity.
Which is great.
and they're trying to find, students, Bill Fitzsimmons, the dean of Harvard, used to talk about the diamonds in the rough. And that's why they mail to so many kids who might think of applying to Harvard. And they're trying to put it in that kind of context.
So is this just the beginning, like the dominoes start to fall? I mean, I feel like there's so many things coming off the pandemic, work from home,
right?
Standardized.
Exactly.
Like we're all just like, yeah, okay, get back to work. And guess what? Standardized testing, we're going back to it. Is it also part of, I was thinking about these schools, especially once testing went away, we're getting so many applications. It's got to be a difficult process to kind of go through them, especially if you don't have standardized testing to kind of help you in figuring
You just
out.
arrange it by how much your parents gave. That's how you do it. That's all the admissions. I'm sorry.
Yes.
I joke. I kid.
Sarcasm,
I kid.
love.
So yes, it is. Yes, they do get a lot of applications, and you can't really feel sorry for themselves because they did it to themselves,
and they make money off of them every application.
They do, and they're also, they're also buying the names of kids who take the test to try to encourage them to apply. I mean, that was our story like a decade ago, and believe it or not, nothing has changed.
So Carol asked about the dominoes falling. Is it just MIT at this point and Dartmouth that are requiring standardized tests again?
Well, we'll see. Other schools have not, are still requiring them, like Georgia Tech. There's a bunch of SEC schools.
Were there schools that didn't remove them?
I think pretty much everybody at the height of the pandemic didn't require them.
Big deal.
But, because you couldn't get to the testing sites.
Mm-hmm.
But, like University of Florida, University of Georgia, they've still required them because they give away scholarship money based on your test score. And they give, if you are a Georgia resident or Florida and you do well and you hit the parameters, you can go for practically free.
And I will say, anecdotally, during the pandemic, individuals who did file test scores did see like scholarship money come, versus not. It's really interesting, and I'm just
so it was optional.
It was totally optional, and a lot of advisors at high schools were like, "Why would you do it? Why would you put it in, even if you did good or even better than good?"
Right.
Like, now, it's just interesting.
But also keep in mind, so we've had a couple of years of them being optional. Who's gonna submit the score?
People who did well.
People who did well.
Right,
so what does that do to
exactly.
the average?
Raises the average.
Raises the average.
All right.
That's interesting.
Math.
I should have done very well on my quantitative, based on your questions just now to me, Janet. I should have done well on my quantitative.
I did not. I did okay.
Do you want to do anything more? Because there's more stories.
Yeah, go ahead.
All right. So you've got a couple of other story about Harvard's top governing board picks. Also, though, about governments looking to maybe tax endowments. Go where you want. We will bow to your brain and where you want to go here.
Okay, so Harvard is a big target with $51 billion. It already pays taxes to the federal government. That happened in 2017 with the Trump tax bill. And now Massachusetts is eyeing it. They would like a little piece of it too. There's two bills that may move forward this week. One would have a 2.5% excise tax on the value of the entire fund. The federal one is on the investment returns. And that could bring in, are you sitting, $1 billion in the state of Massachusetts, and that would fund free college for everybody at almost 30 campuses.
What a great thing.
Can't move to Florida, Harvard.
What great... That's
good
one. The Florida answer to so much.
Can't do it.
Is that likely going to go through?
I don't know. But, there's one thing that Harvard has done is it's in some ways the Republicans and Democrats are very upset with what's been going on anti-Semitism on campus. I mean, who would have expected that Harvard could in some way unify lawmakers?
Yeah, that's really funny.
It's like Harvard and social media companies.
Isn't that crazy?
Right? Are the things that unify members of Congress.
Yeah. And China.
Yeah, China.
So we'll see if they go forward. The second one is also a tax for schools that have legacy admissions in Massachusetts, which MIT does not, and that would give money towards community colleges.
It just means you have to come back. It's already a busy year for you. A lot going on. All right, Janet Lauren, thank you. Higher education finance reporter at Bloomberg News. Check her out on Twitter, X at Janet Lauren, and then at Bloomberg.com.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, you know, the big game is this weekend. We're talking, of course, about the 58th Super Bowl between the Kansas City Chiefs and the San Francisco 49ers. The game held in the gambling capital of the United States, Las Vegas. Betting companies pushing out lots of ads ahead of the game, including this one from BetMGM.
BetMGM is for everyone that loves sports betting. Everyone. But Tom Brady.
Wait, what did I do?
The truth is you've won too much, Tommy. Let others have their turn.
What if I bet in-game parlays and I'm not Tom Brady?
You're it. Now dog me.
All right, well, MGM is for everyone that loves sports betting, everyone but Tom Brady. Wait, what did I do here? All right, the truth is you want too much. It's just funny, like, to just kind of go through what they said. These are, though, the ads that we're seeing roll out ahead of it.
I mean, it makes sense that we're seeing these ads because big money is expected to trade hands this year. According to the Gambling Industry National Trade Association, about 26% of American adults are expected to place a wager on the Super Bowl. It's a 35% increase from last year's Super Bowl. Bettors are estimated to place wagers totaling up to $23.1 billion, which is a $7 billion increase from 2023. We've got with us Adam Greenblatt. He's the CEO of BetMGM, joining us now from Las Vegas. BetMGM is the sports betting operator jointly owned by MGM Resorts and the Isle of Man-based gambling company Entain. Adam, good to have you. Good to see you. Give us an idea of what you're seeing on BetMGM's platform right now ahead of the Super Bowl this weekend.
Firstly, thank you for having me. We are seeing interest that we've never seen before. Cross-section of wagers. We're seeing the growth in prop bets. We're seeing the Swift effect. We are seeing, as I say, a lot of interest. I think also because the event is taking place in Vegas, which really is home turf for us.
So, Swift effect, does that mean more women are stepping up and betting on the platform?
Well, actually, we're seeing it's what we're noticing is the nature of the bets that are being sought out has changed. So, for example, we now offer in Ontario, we now offer the likelihood of Taylor Swift being mentioned in the MVP speech. And that's an interestingly popular bet. We're also seeing a lot of support for Travis Kelce as MVP. And I think that's how the Swift effect is manifesting.
Well, that's what I wonder too, Adam, is the kinds of bets that are being placed. The majority of bets that are being placed ahead of the big game, is it basically who wins ultimately? Or give us some idea, because you really can now dice and slice in terms of how you bet on anything.
So just to set the context, BetMGM will be offering more than 1,000 different things to bet on come game day. In fact, the majority are available now. Historically, the majority of bets and majority of volume were behind what we call the six-pack, which is really the bet for and against who will win the game, the money line, spread, so by what margin will the winner win, and the total points. What we're seeing now is a shift. So 62% of bets are not on that. So more than half the bets are on things called player props. The most popular player prop at the moment is a win that the Chiefs will win by 7 to 12 points.
Okay. Hey, Adam, is this the way that you differentiate yourself from the competitors out there? Because there is no shortage of places to make bets, especially for the Super Bowl. I mean, we got DraftKings, we got FanDuel, we got Caesars. The list certainly goes on. How do you differentiate yourself in a crowded market?
Well, look, the market's been crowded since the beginning. And I think we have BetMGM's proven that we know what it takes to win. And we continue to be a market leader. We have 17% market share in online sports betting and iGaming across North America. And so this puts us firmly in the top tier of competitors. And one of the things that is particularly in our favor this year is that the two leaders that we share the podium with are actually not available in the state of Nevada because of regulation. So this really is our moment to shine. BetMGM's on home turf, leaning into what we call our omni-channel strategy. And given that we are by far and away the premier choice in town, we're expecting to see tremendous volume.
All right, but how would you characterize, Adam, the level of promotional competition in the online sports betting industry now compared to a year ago? It's got to be somewhat fierce, but tell us how you would characterize it.
Well, it's interesting. That's what we're actually seeing. And I'm not sure whether it's as a result of some of the minnows, some of the smaller players actually leaving the market because the power and effectiveness of the leaders has become overwhelming. But we're actually seeing a rational recruitment environment. Our CPAs, our cost to acquire a player, are actually down year on year over the last few weeks.
Hey, I'm wondering about growth here because you're live right now in 28 different markets in North America. You mentioned the market share. You have access to just under half of the adult population in North America. When is a time that you think you will have access to every adult in North America?
Well, that's an important question because that's about when does the music stop? And the good news is the music is not going to stop for a while. Our TAM, our total addressable market, anticipates that in the fullness of time, and there's a question mark on what that means, of course, but in the fullness of time, we expect fully 80% of the U.S. adult population to have access to some form of sports betting.
What do you think are the next two states to legalize or markets set to legalize over the next 1 or 2 years?
Well, the first one I can answer with authority because we're looking forward to launching in the state of North Carolina in the next 4 weeks.
Okay.
After that, it's less certain. We're seeing some positive movements from a number of states. I think the most likely next one, as we look at it today, is the state of Georgia. But ultimately, these become legislative decisions and subject to all the vagaries that go along with those.
Would you say that the space is getting a bit crowded and that we're going to see some kind of additional maybe consolidation or more consolidation?
I don't know that I think you're referring to a couple of the more recognized brands that have joined the space recently. I think there's probably space for 3 or 4, maybe 5. If we look at more mature international markets, perhaps the UK, Italy, the bigger markets, there's generally space for 4 or 5 leading major online players. In the US, it is more concentrated, actually. To your question, is there space for consolidation? Potentially. But one of the factors weighing against consolidation in the US particularly is just the complexity of the operating environment, given that every state is its own regulated environment. So, for a merger in the US, it's like a European operator that operates in all of the European countries, merging with another.
Hey, Adam,
and then figuring out the regulation that goes along with it.
That's true.
We only have about 20 seconds left, but are you looking to make any acquisitions?
Gosh, straight for it. We're very, very happy with the tools, the assets, the relationships that we have. We believe we have what it takes to win, so we're not considering actively any acquisitions at this point.
All right, 20 seconds. So important that in terms of we talk about sports addiction, gambling addiction, you guys are thinking about that, and just really quickly, about 10 seconds here.
This is a real issue. This is an issue of sustainability of our sector. We're making great strides individually as BetMGM, but also in 2024, we will see collective action in this regard.
Adam, thank you so much. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Well, small businesses, the backbone of the U.S. economy. Government data shows that these companies account for 2 of every 3 jobs that have been added in the past 25 years.
Yeah, it's important. And the most recent reading, I should say, on the small business community, it found that U.S. small business optimism ticked up to a 5-month high in December, largely reflecting less pessimism around sales, earnings trends, and economic expectations. That reading just about 1 month ago. We're going to get another read on U.S. small business optimism about 1 week from today, but we actually are going to get one in just about 5 seconds.
That's because our next guest is a member of that all-important engine of the U.S. economy. Very pleased to have back with us Christina Stenovec. Campbell. She's founder of Farm Girl Flowers. It's a business that if you're a listener or viewer of the program, you certainly know it well. It's also a business that she bootstrapped some 12 years ago and has built into a $30 million business. She's joining us here in the Bloomberg Interactive Brokers studio. Christina, welcome back to New York.
Thanks for having me. I love talking about business, the business of flowers.
Well, how is
the
business of flowers? How is your world right now?
Yeah, I mean, we're gearing up for Valentine's Day, which is always a lot of pressure. It's the second largest holiday of the year for us, so there's a lot of anticipation.
Remind us what percentage of your revenue comes from just Valentine's Day.
It's lower than you think. It's about 15%, but Mother's Day goes up to about 20%.
Okay, so
20,
that's
25.
35% of all of your revenue
Yes.
from 2 different days.
Yes, in 2 weeks, basically, of the year.
Are those the 2 biggest holidays?
Yes, absolutely.
All right, so, okay, a favor, like back out the holiday stuff, because, there's expectations around that. But in general, when you look at the U.S. consumer, how have they been ordering just kind of on every other day or just normal days, if you will?
Normal days are down. I wish I had the optimism that the reports are showing right now.
Really?
And that, I think I'm optimistic about next year. So I think maybe that's where some of it's coming from. After COVID, post-COVID, I think that there's been so much change constantly on where are we going to settle out. And I think the economy right now, we're in a gifting market, so the gifting holidays are especially important for us. We have to do really well on those gifting holidays because the everyday consumer isn't consuming as much. They aren't sending as many gifts since we're in the gifting space.
When did you notice this change?
2021. We've been going since 2021 on this. So, we were double the size.
So been declining since 2021?
Yes, we have, but intentionally. So we could still.
What does that mean intentionally?
Intentionally, we're focusing. I'm really excited to see the market change a bit from growth at all costs. All small businesses, startups, everything. Bay Area was all about growth at all costs. Just have those top line revenue numbers grow exceedingly fast, and now we're focused on profitability. So, and I feel like everybody's kind of changed their ways a little bit since we're bootstrapped.
What is it? What is it that Zuckerberg says? The year of efficiency?
Yeah.
That was last year.
Yeah.
But it's carrying over.
It's bleeding into this, definitely. With layoffs, you see still happening, at a pretty rapid rate. People are, you have to be efficient. You have to run very efficiently to make any profit this year.
Remind us about your staffing and your supply chain. Give us an idea of what that picture is.
Our supply chain has changed 4 times since 2020. So we are constantly changing it to adapt with what the market demands are. And supply chain availability is. So 2020, we had a boom. We were over 60 million in 2020.
I sent flowers during the pandemic to people.
Yeah.
We all probably did.
And people
what else were you going to do?
I know.
You couldn't.
I baked my bread.
Baked bread, drank wine, and sent flowers.
Wine, sourdough, and flowers. It was that was the year, right? So I think, there was that, but supply chain was really hard. So then you have to shift and go closer to the flowers. We were buying a lot more in North America at that time. Now we still are buying more in North America, closer to home.
Was that because planes weren't coming?
Yes.
So
Yes.
they're not. These are not planes that are exclusively filled with flowers. These are planes that sometimes have people on them.
Yes.
And it's hard to ship this stuff if those planes aren't flying.
Absolutely. So unless you're going to charter a plane from Europe, when there weren't as many planes going in 2020, you would have to figure out other ways to get flowers, to you. So we were literally in box trucks picking up flowers that time, and then, things have shifted. Supply chain's gotten better, but everything's gotten more expensive. So then you're also, outbound transportation, went from about 26% of our revenue to 41%
That's
overnight.
when gas prices spiked?
Really just, I would, I guess, I don't know if I should say this, but I think it's also linked to stock prices for those companies in 2020. If you look at those for UPS,
well, go there because I've had conversations with some publicly held companies as well, and just talking about prices, like why are they still so high? And smart people scratching their head and just wondering whether folks are keeping prices high because they can.
I think that things have gotten more expensive. Labor is a lot more expensive. So, I know that personally with our company, so I can imagine at the transportation companies, it's the same.
Yeah.
When you're paying a lot more than you were a couple of years ago, where, wages have inflated much quicker than they did in previous, decades. So, that has to be reflected. And I think, American consumers have been taught by certain large companies that shipping should be free, but it's not free. And that's a good point. Good has to pass a lot of people's hands and a lot of trucks and a lot of planes and a lot of gas. And
especially if you're shipping something that's perishable.
Absolutely.
And that has to get to a destination within a certain amount of time, or else it's not going to look or smell as good.
Labor market, can you find all the workers you want?
No. I should say yes, but you pay more. You pay a lot more for the same job.
How much have wages gone up as a cost of doing business for you guys?
I would say about 30%.
Okay.
25 to 30%.
That's since 2020?
I think, it started in 2020 and it's continued to rise. I also think professional labor has gone up as well. It's not just wage level that's gone up in prices. Also, working from home, I think productivity is in question sometimes a little bit. It's harder. It's just not that, people aren't working. It's just really, it's not efficient. You have to have 6 meetings to get things done that would take 1 in person.
Is that what you're doing at Farm Girl Flowers? Are you hybrid? Are you remote?
We are remote mostly. I mean, in facilities, people are working, but remote for a professional level.
Okay.
How much?
Go ahead.
I was just going to say, while we're talking higher costs, how much of pricing or the pricing pressures you are feeling as a business owner, how much can you pass on to consumers? Or are you kind of swallowing a lot of it?
Both. So we have raised our prices in some things. Our core product offerings, we haven't raised those prices in 3 years. We're probably going to need to because our margins are just so tight. But American consumers also, they're hurting right now. When it's $8 for a dozen eggs, they can't spend as much. So it's also making sure you don't price yourself out of the market.
Egg prices have gone down.
Have they?
Yeah, egg prices have gone down. Okay, don't worry.
I just paid $7.99, but
oh, you got to shop somewhere else.
Yeah, maybe the free range thing. I don't know.
Yeah. Are you in the Bay Area?
I'm not. I'm in Washington State.
Okay, you're in Washington State.
Just buy eggs that were in prison. Like that's what, I'm just kidding joke. I don't want the email that I'm going to get.
Okay.
No.
Okay, so let's talk a little bit about. We were talking about your supply chain. Here, fast forward to 2024. Where are you getting your flowers now?
All over. North America, South America, Europe. Mostly, I would say I need to do an audit to see what the percentage is. I would say it's over 50% U.S., but slightly. So it's about half and half probably.
So you think just like we talk about this with everybody, this idea of kind of pushing back against globalization or just having kind of nearshoring, onshoring, it makes sense and probably will continue, do you think? Or if all of a sudden it makes sense to buy outside, you will?
Absolutely. I mean, you can't get enough flowers in the U.S. of all the type varieties you need. So it's just there's a sourcing shortage of certain varieties. Also, gas prices, heating greenhouses in certain areas, especially, on the East Coast, the heated greenhouse is way more expensive than importing those flowers. And so the farmers know that and they just don't heat them through, certain months. And so you have to subsidize during certain times of the year.
Hey, real quick, you bootstrapped this company. You have funded it yourself, partly because a lot of VCs passed on this company. Yeah. What's the exit plan for you?
That's a good question. We should talk about that for a long time. I built it to sell. I don't know that that's the trajectory anymore for us, so we'll see. Building a long-term sustainable business, there's nothing wrong with that, though, and we don't talk about that. Agreed. It's not like the sexy, cool thing to talk about in all the magazines.
But I think that's because so many of these businesses are venture-backed, and they have investors breathing down their necks saying, we need our return.
Absolutely. I actually feel like we're extremely fortunate right now to not have that happening. A lot of my friends that are CEOs that have that same story, they are being forced to show some growth numbers or at least a flat year. And our goal is a flat year this year with profit, but there's no path to profitability. Like overnight, they were like expected to make mom jeans into lowriders again. Right. You can't do that, right? And so they're like, growth at all costs, now profitability. Well, and, we've always had to be profitable.
Was it the owner of Rome that we talked about that kind of had investor money come in and then kind of the business got away and then he got back much more involved. Nate Checkett's more involved in it. So, well, when or whatever the next stage is.
Or just come back.
Just
come back. In New York.
I mean, we might be a long-term business. I might be here for many, many years.
I think it's great. And I would say your workers and your supply chain would appreciate that. No doubt about it. Good luck on this Valentine's Day.
Thank you. Thank you so much.
So appreciate it. Christina Stembel, founder and CEO of Farm Girl Flowers.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.